We always talk about, these big giants of industry, right? And we think Silicon Valley, we think Wall Street. But what about the world of medical devices? Today, we're diving into a company you might not know, Mindray. They're a Chinese company, and get this, they're already one of the top 20 medical device companies in the entire world. That's a pretty huge deal. So our deep dive today is all about figuring out, how did they get there?
Yeah, it's a really interesting story, and we've got a lot of info here about Mindray, like their history, their development, how they're doing financially, and how far they've reached globally. We're going to unpack all of it to hopefully help you understand how they went from, well, basically starting from scratch to becoming this global player. We'll look at the challenges they faced along the way, what helped them succeed, and think about what it all means, really.
So to start off, Mindray is truly global. They're selling their products in over 190 countries and regions, which is, almost
Yeah,
everywhere.
pretty much.
And it's not just like small clinics or anything. We're talking some of the best hospitals in the world, research institutions, all using Mindray's equipment. It's a pretty big sign that they're doing something right, wouldn't you say?
Absolutely. It shows a level of trust in their devices and the quality they offer.
Ah.
And to put this into perspective, think about the global medical device market. Back in 2017, it was already worth a massive 403 billion US dollars. And it was growing steadily, over 4% year on year.
Hmm.
The biggest chunks of this market, in vitro diagnostics, IVD, think lab tests and things like that, then cardiovascular, and then medical imaging, like those big MRI machines and ultrasound, that kind of stuff. Now, Mindray is a key player in several of these big areas.
Yeah, and their product lines, they're really quite broad. A big part of their business is what they call life information and support. Basically, think patient monitoring. And get this, back in 2017, they had a whopping 65% of the market share for patient monitoring in China. They also have a whole in vitro diagnostics division, that's IVD, which covers those lab tests we talked about, like hematology, biochemistry, and then, of course, their medical imaging equipment.
So not only are they present in these key areas, but that 65% share in China for patient monitoring, that's huge. Clearly, doing well in their home market really helped them springboard into the global scene.
Yeah.
And, tying this into a bigger trend, there's been a big push in China for something called domestic substitution. Basically, hospitals in China are more and more choosing to buy medical devices made in China rather than imports. Mindray has benefited a lot from this shift.
For sure. And it's not just about getting a bigger slice of the market. They're also making serious profits. Their gross profit margins are consistently above 60% across all their main businesses, reaching an impressive 66.57% overall in 2018. These are some pretty healthy numbers, I'd say.
Oh, yeah, absolutely. And to understand Mindray's success, you got to think about how the medical device business works, particularly this idea of recurring revenue. It's not just a one-time sale of equipment. A lot of their income comes from after-sales service, and especially the consumables. Those are the things you need to keep using the equipment, the single-use items. Think about their IVD business. Selling those reagents and other consumables, that can actually make up half of their revenue in that segment. That makes for a really stable, long-term business model.
Okay, so they've clearly built this global powerhouse. They're doing really well financially. But let's go back to the beginning, right? Back to the early days, what do we call it? The pathetic old days of starting up. It kind of sounds like a Chinese partner's story, but in the medical device world, their founders, Li Shting and Xu Hang, both had backgrounds in medical devices. Then they brought on Cheng Minghe, who specialized in biomedical engineering.
Yeah, definitely a partnership story. Their first business model was pretty straightforward. They were just medical device distributors.
Yeah.
It was a practical way to start. They could learn the market, see what people needed, and make some money to get things going. But they quickly realized that just distributing other companies' products, well, it wouldn't get them very far in the long run. They wanted more control.
That makes sense. And that led to a big change, didn't it? The decision to start doing their own research and development. I imagine back in the 1990s in China, that was a big challenge. People were probably pretty skeptical about medical devices made locally.
Oh yeah, absolutely. It was a huge hurdle. Back then, there was a lot of distrust towards locally made products.
Yeah.
So to overcome that, Mindray had this really clever strategy. They focused on creating lower-priced products, and they targeted smaller hospitals, especially those in rural areas. This allowed them to get a foothold in the market, in a segment where there wasn't as much competition. They could prove that their devices were reliable and slowly build up trust without having to go head-to-head with the big international companies.
It's like they strategically picked their battles, right?
Exactly. It wasn't just about being cheap. It was a smart move. By targeting these smaller hospitals,
Hmm.
who often had less money to spend, they didn't have to compete as much with the big brands. They could focus on proving themselves and building a solid reputation.
That makes sense. It also reminds me of how other industries have grown in China, right? First, you learn and adapt, then you improve, and eventually you start innovating and leading the way.
Exactly.
In the beginning, Mindray just focused on making products that were affordable and met those basic needs, kind of like what happened with pharmaceuticals and other industries.
Right, it was all about domestic substitution. Offer a comparable product, meet those essential needs, but at a better price than the imports. That's how they really started to grow in the Chinese market. But it's important to say that their products have also gotten a lot better over time, and that's why they're now being accepted globally. Their quality, their features, their performance, it's all improved significantly.
And speaking of big changes, their IPO in 2018 on the Shenzhen Stock Exchange, specifically the Chinext board, that seems like a major turning point. Suddenly they had all this money. For our listeners who aren't familiar, can you explain what listing on the Chinext board means?
Sure. The Chinex board, it's basically a stock market in Shenzhen that's made for companies that are innovative and growing quickly. So for Mindray, listing there meant they suddenly had a lot more cash, and it also made them more visible and credible. Before the IPO, they had quite a lot of debt compared to their assets. It was around 50 to 60%. But with the money they got from the IPO, they could pay off a big chunk of that debt. So by the end of 2018, their debt-to-asset ratio had dropped to under 30%.
Wow, that's a huge difference.
It is. They went from having billions in short-term loans to almost nothing. And their cash reserves went way up and made them much stronger financially.
So it wasn't just about getting rid of debt, right? It seems like their profits really took off even faster than their revenue was growing. And they also managed to cut down on their management expenses from 2017 onwards. It sounds like they were getting much better at running the
Oh,
business.
for sure. It shows they were more efficient, better at controlling their costs. And on top of that, Mindray has always invested a lot in research and development. In 2018, they spent 1.42 billion RMB on it. And what's interesting is that they're increasingly capitalizing their R&D expenses. It basically means they're treating some of those research costs as an investment, which can impact their reported profits in the short term, but it shows that they're confident those investments will pay off in the future.
Listening to all this, it sounds like their growth was really smooth, just straight up. But I was reading that their global expansion wasn't without its challenges. Apparently, their overseas business was actually losing money back in 2016 and 2017. So even though the IPO gave them this financial boost, it didn't solve everything overnight.
That's a really important point. While they've managed to get their products all over the world, actually making a profit in all those different international markets, well, that can be tough, and it takes time. The fact that their overseas business was losing money shows just how hard it is to break into new markets, build trust with healthcare providers who don't know your brand, and compete with those big companies that are already well established there.
This brings me back to something you mentioned earlier about supply chain advantages. It seems like China's manufacturing capabilities, which are huge across so many industries, probably played a big role in Mindray's success. They could scale up their production and keep their prices competitive, right? That worldwide great transition you were talking about.
Yeah, it's definitely a factor. China has become this global manufacturing powerhouse over the last few decades, and they've built these super efficient and cost-effective supply chains for so many things. It makes sense that Mindray would benefit from that. Think about it. Access to all those resources, the manufacturing expertise, the logistics, it all helps them make high-quality medical devices efficiently and at a price that allows them to compete globally. Our sources may not lay out all the details, but it's something that's been observed across many Chinese manufacturing companies that have become successful internationally.
So, what does Mindray's success mean for the rest of the world? What are the implications?
Well, one of the biggest things is that more people around the world might get access to medical technology. Because Mindray can offer these high-quality devices at prices that are potentially more affordable than some of the other big players, they can help hospitals and clinics in developing countries get the equipment they need. That can make a huge difference in places where budget is a big problem.
And how about those big players in the market, the companies that have been dominating for years? How do they feel about Mindray's success?
Well, when a company like Mindray comes along, it shakes things up. They're a strong competitor with global ambitions, and they have a track record of success. That puts pressure on the established companies. They have to think about their market share, their prices, even how fast they're innovating. This increased competition could actually be a good thing for healthcare globally. It might lead to lower prices and push everyone to innovate more.
So, are we looking at a future where the global medical device market is much more dynamic and competitive with companies like Mindray driving change?
It's definitely possible. The success of companies like Mindray raises some important questions about what will happen with innovation, prices, and market share in this industry. We might see new products being developed that are specifically designed for the needs of different markets. It'll be interesting to see how the big companies adapt to this changing landscape.
Right. And the source also mentions something about a big share unlock in Mindray back in 2021. They said it could affect their stock price. I imagine investors would be paying close attention to that.
Oh yeah, absolutely. Big share unlock. It can make a stock price go up or down because suddenly there are a lot more shares available to buy and sell. It's definitely something investors would have been watching closely.
Okay, so let's sum it all up. Mindray started as a small distributor, and now they're one of the top 20 medical device companies in the world. They figured out how to overcome the challenges of being a Chinese company, and they strategically focused on providing value and building a good reputation. They made the smart move to start doing their own R&D, and they benefited from the whole domestic substitution trend in China. And on top of all that, they were probably helped by China's strength in manufacturing.
Exactly. And what Mindray has done shows us that it's really important to understand how these new global players are changing the game, especially in industries that used to be dominated by companies from the West. Mindray's story teaches us that companies from rapidly developing economies can become big players on the world stage if they understand what the market needs, make smart strategic decisions, and take advantage of the opportunities both at home and globally.
So here's something to think about. We've seen Mindray's journey, and we know the global economy is changing fast. So what do you think is going to be the next big thing in healthcare technology? What innovations are we going to see? And what role will companies from these rapidly developing economies play in shaping that future? That's something to ponder. Thanks for joining us for this deep dive today.